this is our downtrend on the S&P since basically the beginning of 2022. And we've been just riding this downtrend line here, and you can see how we're tagging it. Not only did we tag the top of this downtrend at 4,100, we also tagged this 3D 200-day moving average. You can see how the market has tagged it a couple times before, multiple times. It comes in, pushes through, and then reverses. If we go to the daily, I bet we've also got a 200-day moving average. So the 200-day, we pushed above it. I bet there were tons of people that went short at this 200-day and then got stopped out here. Powell colluded, I believe, to stop them out. Apparently, people are saying that a bunch of Fed members, I didn't listen to all of them, but apparently a bunch of Fed members came out before Powell, and they were being extremely hawkish, pushing the market down. And then Powell came out and was essentially bullish. I mean, I listened to his speech. I didn't think he was as bullish as the market reacted. I think the market just went where the most liquidity was. I think a lot of people were shorting up here, and the logical move was to do one last push higher, which completed my fifth wave. So let's look at the wave patterns. What happened here? Why don't I still have the wave pattern? So yeah, okay, so here it is actually. Here's my wave pattern. So this is wave 1, wave 2, wave 3 was our biggest wave. And then we have a wave 4 pullback. This is our pullback here. And my wave 5 target was right up here. 41.13 was my wave 5 target, because if we look here, okay, wave 5 can either be a copy of wave 1. So that would have been like that, right? And that would have put us at 41.70, which is where we are right now. Or it can be a 1.382 extension, which if we of wave 2 to 3, so like this, right? I'll go like that. And that puts us around 41.50. So basically between 41.50 and 40.60 was our target zone. I drew these little boxes because these were major supply zones that we could run into. You can see how this is going all the way back. We constantly hit this area, big area. And then right above it, we've got all this wicks in this area. So it made sense that the market would likely go into this area to hit its maximum liquidity level. And that also is what completes my Elliott wave. 12 hours better. Completed my Elliott wave, right? So that was right here. It just took a long time. Why did it take a long time? Why is everything so slow? This is why. Let me show you. Look at the VIX. This is the VIX index on a weekly chart. Let's go to a daily. Look at what they did. So VIX was all the way up here at the beginning of September, end of September, beginning of October, 33. VIX deeply affects option prices. The higher the VIX, the higher option prices are. Market makers generally sell options and retail buys options, okay? Now, if they could have gotten retail to buy a lot of options up here and then do nothing but rally the market a little bit, and slowly took this is almost 2 months, right? We're in December now. So mid-October all the way through November to now December, month and a half, they absolutely destroyed the VIX, down 50% from the highs. That killed options premiums. Absolutely took a ton of money from retail traders who were also shorting. You know, even I was short to a degree, and a lot of people were worried. So they drove the market up all the way to my final target. This is my final target, basically up here. This 40, 60 to 41.50 zone is the final shorting zone. If we don't turn here and we keep pushing higher, we're in like a new bull paradigm. My entire bear thesis is over, and I will have to switch bullish. You can even see how on the VIX here, we are coming into basically the bottom of the parallel channel. We already went below it. Actually, we got to break back above. We have to W out and break back above here to maintain this. But as of right now, we're essentially below it. We're not even in the parallel channel anymore. It's kind of over. So a little bit questioning my bearish theory up here, which is exactly what should happen, right? When you feel like your theory is wrong, that is actually the point when most of the time you end up being right if you stick to it, because the market wants you to second guess yourself and make a change and not follow your plan and switch your position, because that's how market makers make money. That's how the market in general makes money. So it takes money from the impatient people who are not planning and transfers it to the patient people who have a plan. Let's go back to the S&P. Beginning basically mid-November until the end of November for 2 weeks, the market didn't really do anything. But it did do something. It looks like it did nothing, but you can see from, let's go back to the VIX. This is November 11th right here, November 10th, 11th, and you can see how the VIX just drove down like that. It just lost a bunch of premium, destroyed options. It makes perfect sense why they would do that. So now we've reached my target. Okay, we completed this Elliott wave series. Where do we go from here? We've got a lot of indicators in the 12-hour and I believe on the 8-hour triggering major divergence coming in. Major divergence coming in up here. I think this is the zone to start finally hunting and considering shorts in a serious way. This is the last stand right here. I think you can put on some significant short positions. If you look at this is an ascending wedge, right? And an ascending wedge is bearish. When it breaks down, it is bearish. It kind of broke down last week. There was a bit of a fake out right here, November 29th, Wednesday. Sorry, not last week. This past week, there was a fake out right here, where I actually thought we would break down, but we didn't. I should have looked at this 7, 8, and 9 on the 8-hour and the 4-hour. And then we W'd out and we just took off. This is Powell, right? This is the Powell pump. And now we're just sitting up here. Why are we sitting up here? Because all the market makers that bought down here are now selling up here. Most likely, okay? It takes a long time for them to build and unload, load and unload positions. And that's why the market sits at these points. This is loading. This is unloading. This is loading again. This is unloading. And you could even say this is loading and then shorting at the same time, and then unloading down here, going long, and now unloading and going short. That's why the market sits in these areas, because market makers are building liquidity for the next move.